Alright, so today we're going to talk about the topic of risk and return and calculating the beta, which is a factor in terms of risk for investing in stock. Risk and calculating return and beta, that's the topic. Risk of a firm stock gives a measure of uncertainty, and the more you're uncertain about the true value of an asset or a stock, the riskier it is. So the higher the variance in stock price, the higher the risk investing in that stock price. For this course, for this class, we're going to use S&P 500 as index price, which is the market price changes. And the main reason is S&P 500 is considered more stable, and we want to see if there is a unit change in S&P 500 price. What's the change in other beta of other companies like Walmart, Amazon, Apple, and etc. So that's the main goal. It's very important to understand that the main reason we find beta is that we want to make sure if there is a change, if there is one unit change, increase or decrease in S&P 500, we expect to have, in average, we expect to have how much change in the beta of Walmart, Amazon, and Apple. That gives us some measurement of risk in terms of return. What is return? Return is the expected growth rate, and the higher the rate of the return, the higher the risk. So people prefer to invest in a stock that return higher in short time, and that is risky. So we always look for a balance between the risk and the objective of the investor. So it's really very important that if the investors that we're working with, or want to invest by ourselves, what our goals are. Are we going to make profit or return in long term, short term? And that actually changes the way that we look at data and calculating data. But I can add here that the higher the risk, the higher the possibility of making profit, and also the higher the probability of losing money. So actually when you invest in a more stable stock, that would be less risky, and at the same time your earning will be less in short term, but not in long term. Long term, maybe you can earn more. So you can go to Yahoo Finance by going to finance.yahoo.com, or you can type in Google and find Yahoo. Okay, so this is Yahoo Finance, and first I'm going to search Amazon. That's the example we have for this session. You type AMZ and search, and that gives us the Amazon's stock prices. Alright, so we can see that this is short term. You can see there's a loss. How about in 6 months? Still a loss. And how about in 1 year? How about in 5 years? See, in 5 years, the long term, maximum, there is always a gain, right? So it really depends. You're looking for short term or long term, and the way you do the research is a little bit different. And beta that we calculate is not the only factor that we need to look at in terms of making a decision. This is just giving us a measurement of, or an idea of, how variation is in terms of return. So beta is actually calculated right there, 1.13, and that means by 1 unit or $1 change in S&P 500, you can expect to have $1.13 in Amazon based on the past 5 years by monthly data. So we're going to calculate the same thing, but from a different set of years. And go to historical data. So you will find the company by its name, search it, and go to historical data. And for the example we created for today, you can see that the question is asking us to use January 1st, 2010 to January 1st, 2015 and select by monthly and click on get prices. Okay, so these slides were created like a few years ago, and the way Yahoo Finance might look like is a little bit different, and that's actually okay, since I'm creating this video to update whatever is a little bit different. Okay, so I need to change the dates to 01/01/2010 to 01/01/2015, and I want to go by monthly. Okay, so done, and change this to monthly, and click apply. If you don't click apply, these values won't be updated. Apply. Okay, good. So we have those here, and go here so I can download this data. Alright, so I have data downloaded. I'm going to open it. Alright, so this is the data. If some of your cells look like this, no number there, make sure you give it a little bit more space. That's just it. There's nothing special. So here we just need the date and adjusted close. These two only. Right, so I'm gonna remove this from top, right click, delete, and from top, right click, and let's change the name of adjusted close to adjusted close of Amazon. And alright, we have this, and the formula we're going to use for calculating return is return equals to current value divided by previous value, and then -1. So we want the current values to be on top. So in order to rank these date values from earliest to oldest, we just need to, and the reason we're going to put them in order from earliest, from newest values to oldest values, is just because we want to use this formula, current value divided by previous months -1. So select this data down to here, and it's actually a very simple process. Do not select the label, just select the date values, and go here, and can actually go to home, and we should have sort, and for you it's on the far right hand side of your Microsoft Excel. On top you should be able to see sort, and sort from newest to oldest. Okay, so one more time, filter and sort from newest to oldest. And Microsoft Excel is going to ask you, do you want to expand the selection? And that means, do you want the same value associated to this date, move with it together? And if there's any other column, are they going to move together? The answer is yes. We want the same date with the same value move. So we click sort. You can see that on top we now have $310.35 adjusted value. So this is adjusted for Amazon. Now I need also adjusted for S&P 500, because I told you we're going to see if there is a change in adjusted values of S&P 500. What's the change in adjusted close of Amazon? So to find S&P 500, it's very easy. Just type here S&P, or type GSPC. They're both the same thing. GSPC. That will bring up S&P 500 data. Okay, so we can look at its historical data, similar to what we did earlier. Don't forget to change the dates to the same date that we used for Amazon, 01/01/2010, 01/01/2015. So you're expected to know change dates based on the question. The question can ask you any different dates. It can be 5 years, 4 years, 3 years, 2 years, 6 months. It could be daily, it could be weekly, it could be monthly, and whatever we give you, just adjust it here. And we know that we're working with the monthly data. And that's it. Just click apply. So previously, if you see my slides, you see how we have a download link here, but recently they actually did not put it there. So just to make sure we have this data, we can just simply select and copy the data. We don't really need to click on download to download. Okay. So make sure you download down to the last number, but not that note down there. If you copy the note or the label on top, when you copy and paste it into Microsoft Excel, it won't look like what you see here. So right click, copy, and you're going to paste it right there. But I will paste it down here, and I'm going to adjust it later. And the main reason is on the first row I should have my labels, and then we have the numbers here or data here. Paste, Ctrl V, and when you press Ctrl V, all this will be, or you just click on paste right there and it will all paste here. So I don't need date because I already have dates there. All I need is the adjusted close for this data. And so these are not adjusted, and these are the volume. This is the adjusted close, one before the last column. Adjusted close. So this is adjusted close, ADJ close for S&P 500. Okay, and I don't need this C, column C. So they're next to each other now, and that's all I need. Now I need to calculate my return values. Return of AMZN and return of S&P 500. Okay, and we use the formula I explained earlier. Really quick, go back here to here. You can see showed here. Save the file and show here that we just need these two columns, and we deleted those columns we didn't need. And going back for S&P 500 data, change the dates. All the process I showed you just now is right there, and adjusted close of both, and then calculation of return S&P 500. So on the slides you don't see the part that I explained, the sorting the data, because previously S&P 500 and Amazon, the Yahoo Finance gave all this data based on newest to oldest, but right now they have changed it, so we have to actually change. So this is the formula: current month divided by previous month minus 1. So current row for Amazon divided by previous month minus 1. That would calculate the return for this month. So let's go back to data. Just type equal to, that tells Microsoft Excel that we're going to calculate a formula, put a formula here. So this row divided by the previous row, or previous month, this month, current month divided by previous month, minus 1. You don't need the parentheses because order of operations will divide first. That's it. You just press enter. And bottom right hand side of this cell, when it's a black plus, double click. It's going to copy the formula down to the end. Okay. We don't need the last value because it's dividing by 0, and dividing by 0 is undefined. So we delete this. Just this cell. The same process for S&P 500. So you divide the current value by the previous value. Previous month minus 1. And that's it. Copy the formula. Make sure your last value is deleted. Now we have the return of Amazon and S&P 500. So we can use actually data analysis from Excel to calculate so this is data analysis package on Microsoft Excel. If you don't have it, go to File, go to Options, File, Options, and Adds in, and add the data analysis from there. Okay. So when you go to Files, Options, go to File, Options on top left of Excel. Here you have Add-ins, and it's going to give you this option down here, Manage, Add-in, and click Go, and you just check the Analysis Tool Pack and click OK. I already have it, so I don't click OK. And Data Analysis Package is added to Data. So click on Data. Data Analysis will be here. If it didn't work, just close your Microsoft Excel, open it again, it's going to work. So let's really quick show you from Excel, and then I'm going to show you in JMP as well. Regression, scroll down. Regression, and click OK. For Y, we're going to use Amazon data. Include the label, Control Shift down arrow. That's for Y. Y is Amazon. X is going to be S&P 500. Click on the label, Control Shift down arrow. I'm going to select all. And check the labels, and we want the output to come out in a new worksheet, and that's all we need. Just click OK, and this is the regression results. And you can see here, this is the coefficient, and the coefficient of return of S&P is right there, 1.06. So what does that mean? This is, we have an intercept, we have slope, so that would be return of Amazon equals to intercept 0.005989 plus the slope 1.065879 multiplied by times S&P 500 return S&P. Okay, so that would be the regression formula. And in this regression formula, which one is beta? Beta is right there. That's your beta. Okay, so beta is 1.065879. So what does this number mean for us? This is beta, and what it means is if there's one unit change in return of S&P 500, there's one unit change in return of S&P 500, we expect in average to see 1.06, almost 6% higher return in Amazon. So one unit return in S&P 500. If such thing happens, we can expect return of Amazon changes by 1.06. So that means there's a higher variation in Amazon, right? That means Amazon there's one unit change here, there's 1.06 change here. It means higher variation, higher risk. So we can say that Amazon is riskier compared to S&P 500. Alright, so other than beta, we can also find standard deviation, and standard deviation of return values can actually tell us some measurement of risk as well. So go back to data, and I can actually go here under data analysis, and check the descriptive statistics. Click OK, and let's select both of these. So you can select as many columns as you want. I want to select these two columns, and Control Shift down will go down to the last value. Alright, so I made a mistake here. Let me change it one more time. I select the labels first, and then Control Shift down. Yeah, they're selected. Labels in the first row. If you don't check this, one of the rows will not be calculated, and you want a summary statistics here. Okay, that's all. So make sure everything is good, and then click OK. And here is the average, and also here is the average and the standard deviation. That's the average and the standard deviation of returns of Amazon at S&P 500. So as I said, standard deviation is a measure of variation of return values. Which of these two, S&P or Amazon, which one has a higher standard deviation? Of course, Amazon has a higher standard deviation, which is higher variation. So return of Amazon is 0.08, and return of S&P 500 is 0.037, and of course, based on SD, standard deviation, Amazon is riskier. Okay, so now, since we already have JMP software, let me show you how to do the JMP. For JMP, when you download this data and you calculated these numbers correctly, just select them, include the label, and right click, copy. Only the returns are enough, you don't need the others. Just copy the return values and open your jump. And new data table, or go to file, and on file click on new, and then data table. Data table. Or it's much easier to do it here, right there. That's your new data table. And we already copied the two return values. We want to paste them, but don't just paste with column names. This way the labels will go up here and data will go down here. So paste with column names, and that's my data. Now I need to get my regression. Go to fit y by x, or analyze fit y by x. I said that S&P 500 is explanatory because we want to see if there is a change in S&P. What is expected change in Amazon? So Amazon goes to Y response, S&P 500 goes to explanatory. Click OK. Alright, we have a scatter plot, looks pretty much linear, and I can see my red arrow summary statistics will give me the mean and standard deviations, and then I want to see the fit line, regression line. That's the regression line. That is the equation that I wrote in Microsoft Excel. So you can see the beta is the slope 1.06. Right? That's how you find your beta, or you find the regression line using jump, and that's actually very fast and easy. Okay, so that was today's topic, and there are many other topics, and there are many other statistical measures and many other factors involved when you want to make a decision in buying a stock, and beta is just one of them. Okay, so you always need to make sure you check the financial statements, read the news. Be sure that you know the latest information about that business you're going to invest in. Don't just look at beta. Beta is just one of the values or measures that you need to look at. There are many other factors involved. Thank you for watching. Don't forget to subscribe for my channel, and I will keep uploading new videos, and hopefully you can learn a lot more for this course.